So you've clicked this video to know that one big mistakes most traders often make that cause them to lose a lot of money in their trading account. That being said, let's get into it. So now you can look at this. This is as a supply and demand trader, you're looking forward to finding aggressive moves on the chart. So you can see this is a strong aggressive move to the downside, which means there was a lot of sellers at this very point. I'm going to zoom in now. Ignore this, I have an alert, a point of interest I'm looking forward for price to come back to. But that's not the point of this video. The point of this video is what we are doing right now. So I'm zooming into this. Let's make it bigger so you can see clearly. All right, so as a supply and demand trader, SMC trader, you are looking forward to catching that reversal, or even if you trade support and resistance. So now you want to look at an aggressive move to the downside, which is pretty obvious. This is one, so that checks the first criteria. The second criteria is you want to make sure that that move breaks structure. So as we can see, this downward movement here, this downward trend broke structure, so which makes it two. So it's quite valid that price is supposed to respect this region when it comes back to it. So now the big mistake, what is the mistake? A lot of people be like, okay, this is their point of interest like this. Let's use the last buy candle before the massive sell, so like this for example, and then we mark this out here. So you want to see a reaction. Let's make this bigger a bit. You want to see a reaction when price comes back to this. I'll change the colors and name it your supply point of interest. Supply PY. Very good. So you want to see how price reacts when it gets back to this region. That is what you're looking forward to. Just like the way this write-up is, I named it supply point of interest. Why is it a point of interest? Because the truth is there is no certainty to what the market is going to do. You never can tell how the market is going to behave. You can only make your analysis and know, but the market is going to do what it wants to do regardless of your analysis. So to be on the safer side, you need to always wait for confirmation. That's the biggest mistake. Wait for confirmation before placing a trade. But unfortunately, a lot of beginner traders, they don't often understand this key thing. They just set their limit order right away instead of waiting. Okay, take for example, now you want to cross the road. What is the best thing to do? We all know every car has a brake, all right, and every car has a driver. But does that mean you're going to stand in front of the road and be like, where there are a lot of cars moving, you just jump into the road and stand and expect, okay, every driver has, every car has a brake, and then the driver knows how to press the brake. So once he sees me, he's supposed to stop and respect me on the road. It doesn't work that way. To be on the safer side, yes, it might work. The driver might stop and be like, why are you doing this? It's respect and your life is saved that day. But on the other hand, another time the brake could fail, the driver could not see you on time, or so many things, and then you get crushed out of your own stupidity. Nobody else to blame but yourself. That's the thing about trading. Okay, everything you do is you. The market is never wrong. You are the one behind every win or every loss that you take. Okay, so the best approach to do it is that you look left, you look right. Okay, the coast is clear. Now you can cross in peace. So let's get back to this trading. That was just a quick illustration to make you guys understand what I mean. So now a lot of people be like, okay, this is a point of interest. What they'll do is they set a short limit order like this. They set a short limit order like this. Entry at the last buy candle for the sell. Stop loss, let's use this liquidity here, this liquidity grab before, and then they want to target, let me not even say they want to target the whole move, because if I say they want to target the whole move, it might sound funny for me. So hold on, entry at the last buy candle before the sell, stop loss at this liquidity high here, or you might even say okay, slightly above the liquidity high for breathing space, and then you want to target a 1 to 2 risk to reward ratio, right, at the very least. So 1 to 2 risk to reward ratio like this, at the very least. 1 to 2, 1 to 3, or let's say 1 to 3, 1 to 3 risk to reward ratio like this. Good. This is not bad, actually. This is not bad. This is not a bad setup. But the problem is you don't know if price is going to respect this supply region. You are just anticipating. Okay, you saw an aggressive move, you saw a break of structure to downward side, but you should have waited. Now let's fast forward to how price, turned out to be. So we can see, I'm going to make this bigger now. I'm going to make this bigger, because now you've set your limit order and you've left it, right? You set your limit order and you left it, hoping for price to respect your analysis once it comes back there. So let's see if price actually respected it or not, and that will bring us to the conclusion of this whole video here. Now, can you see what happened here? Can you see what happened here? Price went straight and just tore that's your whole supply region. It tore it. Okay, it tore it, which means this trade will have taken you straight into SL. No buts, no any other thing. You will have just had your limit order smashed in and then straight to your supply region. Was this a valid supply region? Yes, it was. There was an aggressive move. There was a break of structure. It was actually valid. But the biggest mistake is you didn't wait. Okay, let's say you traded like this. You didn't wait for price to react at that region first. And as you can see, had it been, let's remove this. Had it been you just set a point of interest and then set your price alert so it dings you once price is crossing that place, you could have been able to say that, oh no, price is not going to hold at this point because it broke through it, retraced a bit, and then you can see grabbed liquidity, and then boom, we had that upward push again, right? So it tore that whole region. It didn't hold at all, and you could have saved yourself from taking that trade, which means you would have saved yourself from taking a loss. So if you want to know the right way to trade, the right way to do things, rather than just setting limit orders, instead of understanding how to see how price react at a certain point before taking that trade, after you've seen a certain reaction at your point of interest, which gives a kind of confirmation signal, you can check the next video that's going to pop up, and I'll see you guys there.